Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the things that's become clear over the past year is that Elon Musk and Tesla are really betting their future on artificial intelligence. The goal now is no longer to sell vehicles with a 25-30% gross profit margin. That is out the window because profit margins are now below 20% and probably trending lower in Q3 and Q4. So now the story has changed to we're going to make that money up on the back end by selling full self-driving and AI features in the future to this massive fleet of vehicles. But those products aren't yet commercialized. And so the reality is that investors today are betting on AI products in the future to generate the value that investors are already pricing into the stock. So I want to go through exactly what that means and why I think this is a much riskier bet than a lot of people think. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you enjoy this video, check out my newsletter, Asymmetric Investing. I have a link to that in the show notes. And I want to first just show some charts about how much money Tesla is making on its vehicles. You can see that over the past year, the margin per vehicle, the profit per vehicle has dropped from $14,602 to $8,167. The reason that gross profit is down about $6,000 per vehicle over that period of time is because the price per vehicle is actually down $12,000 over that period of time. So there is some cost reductions that Tesla has implemented as it scales some of its vehicles, but nowhere near matching how much they're reducing prices. Now, we have seen multiple comments about this in the past in the conference calls. One of them in the first quarter is Elon Musk basically joking that, hey, we could sell all of our vehicles at a zero gross profit and make it up by selling subscription software in the future to customers. So basically the idea would be, well, we'll sell 10 million vehicles a year and eventually people will just pay us $15,000 for full self-driving when that's finally finished. I'm going to go to the transcript from the most recent quarter, and I've just highlighted the number of times that Tesla mentions AI. They talked a lot about being on the cutting edge of AI development, how they're going to impact products like Optimus and Dojo, the Cybertruck, why this requires additional spending. Elon Musk talks here about spending north of $1 billion in the next year on Dojo. This is the AI computer that's going to be powering FSD and the autonomous driving efforts. Tesla's developing its own products along with buying all kinds of cards from NVIDIA. So there's just a ton of discussion here about artificial intelligence. And a vast majority of those efforts are built for advancing self-driving technology or some sort of robot. We don't know exactly what that robot is going to look like, when it would be launched, what it's actually going to do. Full self-driving is something that Elon Musk has basically started to bet the entire company on because, as I showed earlier, the margins per vehicle are starting to come down. At the same time, Tesla is still ramping production by 50% a year. So the reduction in prices and margins indicates that there's not enough demand for Tesla's vehicles at current prices. This is the way that supply and demand works. So what you do is you end up lowering prices to try to boost demand. That works to an extent, and there's a law of diminishing returns, and eventually you're not generating any margins. That's why he joked about selling vehicles at zero margin and eventually making that up. But what do we know about Tesla's artificial intelligence products today? Well, we know that FSD is not being tested with a safety driver as a fully autonomous system. It's not even being tested. We know that FSD is not being tested without a safety driver. So there are already multiple companies that are testing vehicles without safety drivers, some that have already reached commercial operations. Cruise and Waymo would be two of the biggest examples of that. Cruise is already operating in 8 cities. Waymo is operating in 2 cities at least. Tesla not even testing. Elon Musk also admitted on the second quarter call that FSD is not currently as safe as a human driver. So what do you get when you add all of this up? Elon Musk and Tesla are making a huge bet on artificial intelligence being the future of the company. The theory is that they will get millions and millions of vehicles out into the field and people will pay for AI features in the future. But those are AI features that do not exist today. So as an investor, you are buying a company that is going to be generating revenue from AI features that don't exist and are not being tested today. I think that is a very, very risky investment. But that is exactly what Tesla is, and that is exactly what Elon Musk is betting on. Think about this. What would you pay for Tesla stock if FSD was taken off the market and had no future value? That is something that all investors should be thinking about. Because as it stands today, FSD is nowhere near full autonomy. There's no robo-taxi service. There's no indication that Tesla is working with regulators to get a fully autonomous vehicle on the road or any sort of software on the road. You have to have licenses to run a ride-sharing service. Talking about some of these features is one thing, but actually building them out is something completely different. And right now, I don't see any evidence that Tesla is actually leading in autonomous driving. And this is ultimately what investors are betting the company's future on. So what do you think? Do you disagree? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.